Hi, this is John Modene with Remax Masters, and I want to help you learn more about real estate in Northwest Ohio. And today's question from my NWO Real Estate Update is, what kind of mortgage issues, John, are you seeing in 2023? Well, I really don't know. I got to bring a mortgage guy in, my mortgage partner, Rich Kopronica, and so we're going to tackle these questions together. And so here we go. We'll point out something that should be real obvious. Without money, without financing, there is no real estate market. None. Nothing moves without financing. Nothing closes without money. Nothing you own will sell without money, and you can't really buy anything either. So real estate can be properly viewed as the relationship between real property and hard money. So I've got my mortgage guru, Rich Kopronica. Hello, Rich. Thanks for joining us.
Yeah, absolutely, John. Thanks for having me.
You're with Midwest Mortgage, and you're going to help me answer these questions, keep me on the straight and narrow here. So here's what we think. Here's what I think, and we'll see if Rich agrees. Number one, points. We're going to see points in 2023. Buyers are asking for points. And you say, what's a point? A point is 1% of the sales price of the deal in question, of the strike price. Points are then spent as an extra cost incurred by whoever is paying them on the contract to take the interest rate down. Rich, how many points does it take to get a good reduction on a conventional rate right now?
Yeah, I mean, ultimately it varies on what the market's doing, but, traditionally you'll see, folks will pay anywhere from 1 to 2 points, which is a percent of the loan amount, to reduce their rate, upfront, and then that will stay over time. But, yeah, so it can vary.
And you can't pay 10 points, that's not allowed. You can pay 0, but there's a limit, and the federal government has things to say about that, right?
Yes, you are correct. Yep.
Okay. So number two, what are we going to see? We're going to see buydowns, and it just really depends on what market you're in. Buydowns is a fancier way to say points. So when rates go up, buyers look for a good way to get their rate down, and they're going to ask the seller to buy my rate down. Number three, I think we're going to see tighter credit standards. When the Fed wants to slow things down, they're trying to slow the market down right now. This is the easiest trick in the book. They'll just say, oh, you have to have a higher credit score or more income or less debt. So if you're planning on buying in 2023, you might agree or disagree, Rich. We're telling our buyers, don't make any credit mistakes. Watch your spending and save more cash than you would have needed last year. What do you think about that?
Yeah, I agree. I mean, ultimately, a buyer wants to be in a position of strength when they're going into negotiation. However, we are seeing, with the slowdown in activity, again, there's more demand. Like, lenders as a whole aren't originating as many loans, so you're going to start to see the secondary market maybe expand on certain things. Like, we're seeing new bank statement programs, DSCR loans, or debt service coverage ratio loans. So
mortgage brokers are becoming more aggressive also.
Correct. Yes, the appetite is growing for that stuff.
All right, next, I think we're going to see more FHA loans. And in the city of Toledo, FHA is the biggest type of financing. Last time I checked, 60, 65, 70% in some neighborhoods. And so when credit is tightened and money is expensive, rates are high, buyers have more reasons to go with the lower cost scheme of FHA loans, and they can finance almost all their closing costs too. So my advice is, if that's going to happen, make sure your home is FHA ready and make sure it's attractive to FHA buyers. What do you think, Rich?
I agree with that wholeheartedly. FHA is a good program. I know there's a lot of misinformation out there about how restrictive it is on property condition, but ultimately, the requirements are simple things that most consumers, whether you're FHA or conventional, would want in a new house anyway. And for a seller to be positioned from strength, I think it makes total sense to accept FHA offers. You are opening up to a much broader pool in order to sell your home.
Your house will be worth more if we can
100%, without a doubt.
So there you go. The market's constantly changing. It never stops. And we're doing things in marketing and selling homes today that were impossible 20 or 30 years ago. So my team is always changing too, and ready to help you in a changing mortgage market with your real estate problems. Our team motto is simple: a tradition of trust in Northwest Ohio real estate. And this tradition of trust ethos works. It's based on proven biblical concepts. Always tell the truth. Always treat others better than you would want to be treated. And Rich and I and my team can't wait to help more people buy, sell, manage, and grow their real estate holdings. So thanks for watching. If you need help, if you have real estate questions, if you want to sell or buy, just call John. I'm at 419-466-SOLD. You can check me out at modene.com or 466sold.com. Thanks for watching. Have a great day.